Imagine a world where empires no longer sail under flags but under foundations, where conquest is not measured in miles or men but in metrics, carbon offset ratios, ESG scores and climate pledges. A world where the richest men on Earth do not drill into the ground but into the atmosphere itself, where the most powerful dynasties are not those who own land but those who own the future of land use. This is not the world of tomorrow, it is the world we already inhabit. And its architects are not kings or presidents but financiers, technocrats and venture capitalists. This is the story of the hidden billionaires of climate change, the quiet elite who turned planetary crisis into planetary control. Their story begins not in Silicon Valley but in the counting houses of Amsterdam. The year is 1602. The Dutch East India Company is born, not just as a trading enterprise, but as the world's first multinational corporation. It issues shares, pays dividends, and builds an empire on spices and speculation. But beneath its ledgers lies a deeper innovation, the abstraction of value. Pepper becomes profit, distance becomes data, and the natural world becomes a balance sheet. This logic of turning nature into numbers will echo through centuries, from the plantations of Java to the carbon markets of Geneva. Fast forward to 1763. The 7 Years' War ends, and Britain emerges as the dominant colonial power. But war is expensive and debt is mounting. Enter the financiers, Barings, Rothschilds and others, who lend to governments, fund expeditions, and underwrite empire. They do not wear uniforms, but they redraw maps. They do not command armies, but they dictate terms. Their power is quiet, contractual, and compounding. And as the Industrial Revolution accelerates, their investments shift, from trade routes to railroads, from colonies to coal. By the late 19th century, fossil fuels are the lifeblood of empire. Oil powers navies, coal powers factories, and carbon powers capital. But even then, the seeds of climate finance are being sown. In 1896, Swedish scientist Svante Arrhenius calculates that burning coal could warm the planet. His findings are ignored, too abstract, too distant. Yet in the boardrooms of London and New York, abstraction is already currency. Futures, options, derivatives, tools that turn uncertainty into opportunity. The atmosphere, still unpriced, remains the final frontier. Then comes 1972. The Club of Rome publishes The Limits to Growth, warning that unchecked consumption will lead to collapse. The report is controversial, but it sparks a shift. Environmentalism enters the mainstream. Governments begin to regulate pollution. Corporations begin to rebrand. And a new class of actors emerges: the sustainability consultants, the green lobbyists, the climate philanthropists. They speak the language of impact, but they operate in the grammar of influence. In 1997, the Kyoto Protocol is signed. For the first time, carbon becomes a commodity. Emissions are quantified, capped, and traded. A new market is born, not of goods, but of guilt. Companies can pollute, but they must pay. And those payments flow into projects: reforestation in Brazil, wind farms in India, methane capture in China. The logic is elegant, the implications profound. Suddenly, the atmosphere is not just shared, it is owned. And those who broker its ownership become its stewards. Among them is Richard Sandor, an economist who founds the Chicago Climate Exchange in 2003. His vision: a voluntary market where companies can trade carbon credits. The exchange attracts major players: Ford, DuPont, Motorola. But it also attracts speculators. Credits are bought and sold like stocks, their value fluctuating with policy and perception. The exchange eventually collapses, but the idea endures. Today, carbon markets are worth billions, and Sandor's legacy lives on, not in legislation but in ledgers. Meanwhile, in Silicon Valley, climate tech becomes the new gold rush. Venture capitalists fund startups promising to decarbonize everything: energy, agriculture, transportation. Bill Gates launches breakthrough energy ventures investing in nuclear fusion, carbon capture, and lab-grown meat. Jeff Bezos pledges $10 billion to fight climate change, while Amazon's emissions continue to rise. Elon Musk sells electric cars, launches rockets, and mines lithium. Their narratives are compelling, their contradictions stark. They are hailed as saviors, even as their lifestyles, private jets, mega yachts, sprawling estates, belie their rhetoric. But the real story lies elsewhere. In Congo, children mine cobalt for EV batteries. In Indonesia, rainforests are cleared for palm oil labeled sustainable. In Honduras, indigenous communities are displaced for hydroelectric dams funded by climate bonds. The new green economy mirrors the old colonial economy. Resources extracted, profits exported, voices silenced. The maps may be digital, the currencies virtual, but the dynamics are familiar. The periphery serves the core, and the core grows richer. Consider BlackRock, the world's largest asset manager. With over $10 trillion under management, it influences governments, corporations, and ecosystems. Its CEO, Larry Fink, writes annual letters urging sustainability. Yet BlackRock remains one of the largest investors in fossil fuels. It holds stakes in oil giants, coal producers, and pipeline projects. Its ESG funds often include companies with dubious records. The contradiction is not a flaw, it's a feature. By investing in both destruction and salvation, BlackRock hedges its bets. Climate change becomes not a risk to be mitigated, but a volatility to be monetized. And then there are the carbon cowboys. Entrepreneurs who buy land in Africa and South America to plant trees, generate offsets, and sell them to polluters in the West. They promise reforestation, biodiversity, and community development. But in practice, they often displace farmers, enclose commons, and create monocultures. The carbon is counted, the people are not. The credits are certified, the histories erased. It is a new form of enclosure, a new frontier of accumulation. In 2006, the World Bank launches the Forest Carbon Partnership Facility. The idea, pay countries to preserve forests. But critics argue it creates perverse incentives. Governments evict communities to claim carbon rights. In Uganda, villages are razed for offset projects. In Papua New Guinea, tribal lands are leased to foreign investors. The carbon stays in the trees, but the people lose their homes. The logic of climate finance is seductive. It aligns profit with planet, turns stewardship into a business model. But it also raises questions. Who owns the atmosphere? Who decides what counts as green? Who benefits from the transition? In the 19th century, European powers divided Africa with rulers and compasses. In the 21st, financial institutions divide it with spreadsheets and satellite imagery. The hidden billionaires of climate change are not cartoon villains. They are philanthropists, technologists, investors. They speak the language of impact, innovation, inclusion. But their power is real and their influence vast. They shape discourse, capital, and solutions. They sit on NGO boards, fund university research, advise governments. They are the new merchant princes, not of pepper or porcelain, but of parts per million. To understand their rise, we must revisit the history of enclosure. In the 18th century England, common lands were privatized, peasants displaced, agriculture industrialized. Today, the commons is the atmosphere. Carbon is measured by satellites, verified by algorithms, traded on exchanges. The air becomes property, the climate a ledger. And those who control the data control the destiny. In 2021, the Task Force on Scaling Voluntary Carbon Markets, led by Mark Carney, proposes a blueprint for a global carbon market. The goal, a unified, transparent, scalable system. But critics warn it entrenches corporate power, marginalizes local voices, commodifies nature. The task force includes Shell, BP, and other emitters. The foxes design the henhouse. Yet the allure of climate capitalism persists. It promises markets that save the planet, innovation that trumps regulation, billionaires as benefactors. It offers redemption without sacrifice, growth without guilt, change without challenge. It is a story tailor-made for Davos, TED Talks, glossy reports, green bonds. But history teaches otherwise. The abolition of slavery did not end exploitation, it transformed it. The end of colonialism did not dismantle empire, it rebranded it. And the green transition, if left to markets alone, will not deliver justice, it will deliver returns. The hidden billionaires of climate change are not anomalies. They are the logical outcome of a system that sees the world as a portfolio, nature as an asset, crisis as a catalyst. They are heirs of empire, stewards of capital, authors of a new chapter in an old story. Their story is not over. It is unfolding. In boardrooms, parliaments, protests. It is written in contracts, coded in algorithms, whispered in corridors. It is a story of power, paradox, possibility, and it is ours to tell.